jobs, the amount of job openings has dropped pretty significantly the past couple of years. I mean, we were at 12 million job openings, 3 years ago. Now we're about, 7 million job openings. So that number has fallen. So if you lose your job, it's tougher to find a job, not as many jobs available out there. So we're seeing some stress in the labor market. So we'll see how that transcends. And why is that important? Obviously, 70% of the economy is consumer consumption. So if you lose your job and you're not working, you're not going to spend, right? And we've seen that with the unemployment rate drifted up a little bit. A couple months ago, we were at 4.1. We've drifted up to about 4.3%. I've mentioned several times on the past couple months calls that, when we get this drift up, right? And if something happens with a recession, then the acceleration occurs. So the drift up usually occurs, and I'm not calling we're in, we're going to hit a recession or not. I think the consensus is not out on that. Nowhere near where we were back in 2023, where 80% of economists were predicting a recession, and we haven't seen those numbers yet. But again, that wouldn't surprise me if we hit one as well, because recessions are very hard to, call it impossible to predict. But when you see this, sometimes you'll see the unemployment rate vamp, to start to turn up a little bit and then shoot up. And then these points of where it shoots up is when a recession hits and it accelerates. Again, this was the Great Recession of 07, 08. This was COVID. We saw a huge jump up here. Here in the early 80s, we saw a jump up from, call it 7% to 10+%. And then the market started to kind of start to grow again, and the jobs report, and people started going back to work. The unemployment numbers started to drop. So this is what we're monitoring closely to see if there's any, short-term shock to the labor market.